Hey, good morning, everyone. What is up? Hope everyone is doing well. Hold on, give me a second here. All right. I hope everyone's doing well. It is Thursday. Happy July 13th. It's Thursday. Yeah, just checking. Happy July 13th. Hope everyone is doing good. Let's start this off. Yesterday, we had the inflation figures that did come out. What's going on with this thing? My dog keeps flickering. Anyways, um, we had the inflation figure that did come out yesterday. A lot of people were anticipating softer print, and that's exactly what we got. We'll talk a little more about the inflation. We'll talk about where this market's headed realistically. And if you guys haven't noticed, I've been talking about the buy the dip market for quite some time now, and I'm still under that principle, right? I don't think this is one of those things where people expect, oh my God, the macro this, the macro that. It doesn't matter, right? Like macro hasn't ever worked pretty much, right? It's super lagging. What you have to understand is that we're in the buy the dip regime, and I think a decent pullback is probably going to come in the coming weeks, right? Seasonality is printing some kind of downside after the July OPEX period into the end of July, where in the fall we could experience some kind of pullback. I don't really expect too much of it, but I'll break that down in a bit. But let's talk about economists, analysts, everyone talking about inflation, right? Everyone's pretty much been divided in terms of the inflation report card, but it seems like the market likes to think that it's headed in the right direction based on this large upside movement that we saw. Like we said yesterday, the CPI, the Consumer Price Index, dropped to 3% year over year in June, down from the 4% headline in the prior month in May, which core inflation, which excludes volatile food and energy prices, only grew about 0.2% month over month after climbing by 0.4%. Or more over the past 6 months. So following the data release, we saw that the S&P and NASDAQ ended yesterday's session at the highest levels this year, right? And over a year, even building on the potential of a softer landing for this quote unquote recession. So there's multiple ways to view this, right? The ugliest way that we could view this is that on the surface, pretty much the easy part of the inflation cycle does appear to have been completed. The core measure of inflation is undoubtedly better than where they were, but the Fed isn't likely to take much comfort in 1 month of data being better than the other, right? We have to see this consistently hold in its target range realistically for the Fed to be happier. We still see the Fed expecting about 90%, if not more, of a chance of a 25% increase this month in terms of the Fed's funds rate. So core goods and services are still relatively high even after modest improvement, and it'll put into question the fantasy the stock market has now had for some time that inflation is just going to vanish away or just drop off. Realistically, inflation cycles, right? We could see another burst of inflation in the next cycle, right? But as it stands right now, I think we're fairly comfortable in buy the dip territory. We would just need a little sector rotation. Now, there's also the good out of this, right? The roots of further decline in the inflation and the rate of inflation are well established and should support the continuation of the bull market in stocks realistically, which again, the Fed raising while inflation continues to drop and the market continues to press higher, I think that all pullbacks do just get picked up for the foreseeable future in the coming. Well, I think lows for this year are priced in 100%. Well, let's not say 100%, but 90%, right? And then I think dips are going to get picked up in 2024 as well. 2025 and 2026, I don't know, we'll see. But realistically, the way that this is going, all-time highs are fairly probable into the end of the year. Uh, the core rate remains well above the target. The roots of its decline are staring us right in the face, and the inflation hawks will do their best to find components of price index that are not falling in line with the overall rate, but they'll realistically come up empty-handed. We talked about how softer landings and general easing on inflation comes from the Fed's funds rate being higher than the perceived inflation rate, which again, if you go to Trueflation, which is like a Twitter handle, they probably have a website. I think their quote unquote Trueflation is somewhere in the mid twos. So realistically, I stand fairly firmly behind soft landing now since March and dip buying realistically, right? Dip buying into these coming months. So overall, market's still sustained to the upside. We're seeing upside pressure here. We're seeing continuous buy yesterday, massive stuck shorts into 4500s. That area was supported. Now we're trading 4525, which is an interesting area. It's a key area that we have. I also do like the 4532. I think that we can start to see somewhat of a pullback in the markets, but I would like to see 4555 trade. I like to see 45-55 trade, and then we can start seeing pullbacks. I think a lot of people are too bulled up at this point. We're getting a little overbought, but that doesn't mean that this is the peak. That means that we could see a little more upside momentum before we can kind of look for tops. It does get very difficult to try and pick out a top, so I would want to see the 45, 11s, 12s, blah, 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 hold out as support structure. And max 4,500 today, hold out as support structure, right? I do want to see if we can pick up some of these dips to target the 32 and 55s today before we get into OPEX tomorrow, which could get kind of sideways. So leading cautiously bullish today. Yesterday was in the coming weeks leading into maybe August, September. We do get the market pullback around 4,200. I think the lowest we touch is probably like 4,170. I think that happens before October. So if we look at that now, let me see, where is this silly little chart of mine? Hold on. Let's do some anticipating here. Let's do some for fun. If we do end up seeing 4,200, let's say maybe 10 points higher than this, maybe that marks the top. Realistically, what we get is about a 7% drop, 7.3% drop in the S&P 500, which I don't think is out of the question, right? I think a decent little pullback is possible. I like somewhere into the 42s down to 4160. I think that's a fairly reasonable area where I think a lot of dips are going to get accumulated and bought for the very foreseeable future. So I'm pretty much just buying all dips in this market. Anything over a 3% dip, I think, is pretty good. Anything over a 5 to 7% dip and above, I think, is a gift. So that's where I stand. What we're going to do is open our live trading room today. We had some pretty good trades yesterday, right? Some longs, even a short. And let's do that. So if you want to go check that out, check out tradeproacademy.com. We also have a free course that's available on the homepage, futures trading course, where we talk about distribution theory and order flow. And we'll see you guys tomorrow for OPEX. So OPEX trading gets a little more volatile. Realistically, there's a chance I might not even trade it, but we'll see. All right, let's talk. Let's talk tomorrow. Thank you, everyone.